Hey there. So I today want to chat with you about looking at your income statement. I'm sure that's nobody's favorite thing to do right now because everything is really wonky and that your income statement probably looks weird to you because it's probably not at all what you're used to. So I want to chat about how to look at it in this strange time, how to account, and how to know if you're still on track in the sense that you're not overspending or you're still making money. Even though your revenues are down, it could be that expenses aren't tracking in the same way. So what do I mean by that? So when we look at a seasonal business, and so even if your company is not seasonal, it is like we can look at it in the same way as a seasonal business right now because there's a sudden dip in revenue, right? And so what we do with seasonal businesses is we generally compare percentages. So I mean, a seasonal business would be able to compare last year and it would be similar, but what we can do is we can look at percentages. So when you run an income statement and have a look at what percentage each expense is of your total revenue. So what that's telling you is every time you make a dollar, how many cents are you spending on these other expenses? So credit card fees, for example, are about 4% or so, 3% of whatever you sell on your credit card machine. So for every dollar you make, you have to spend 3 cents or 4 cents on that credit card fee. So if you look at your expenses and you can compare the percentages to last year and say, okay, I'm spending, on cost of sales or, the supplies or whatever it is that you need to create your product or to actually make a sale, those have gone up by a little bit, or maybe they've gone down, but the percentage is the same. So it's still 40% of my revenue or something like that. Then you're kind of on track. You're in those same, like your expenses and your revenue have moved together. So I think that's really important when we're comparing a season in our business that doesn't really fit into the rest of the business. And in comparing percentages, you can get a much better picture of where you're at right now and maybe what changes need to happen. I know that rent is going to be a tough one. Rent is going to be a much bigger percentage than it normally is. But some of those ones that are variable expenses are the ones that we really want to be looking at. You can also use this opportunity to do some ratio analysis, which is actually much better than it sounds. I know it sounds dull, but I find it exciting. Maybe not exciting, interesting. You can look at the things like the percentage of revenue that is your net income, for example, or you can have a look at your balance sheet and look to see what your current assets divided by your current liabilities are. And just look at some of those numbers, and you can track across the periods, and that's the way that you normalize your income statement. That's all I have for you today. And I'd love to know, are you looking at your financial statements right now in this time, or are you just like, oh, I know that it's not good, so never mind? I have some clients that are doing that and some clients that are more involved because they really want to know what's going on. So let me know, are you looking at financial statements right now in this weird time, or are you like, no, not worth it at all?